Stock of the day, thought we'd look at the smaller end of the market, MoneyMe. It's out this morning with a whopping 190% increase in its gross revenue from the previous period, up to $55 million. Loan book now sitting at $1.4 billion. MoneyMe, a little fintech. Gaurav, what did you think of the update? You're a investor in it?
I am an investor, who's sitting on big losses, I might add.
Okay.
I've lost about 60% so far. It's a recommendation intelligence investor. We don't own it in the funds because we decided it was just too speculative, and we generally have conservative investors, so it's not in the funds, but it is a buy rec. I own it. I'm not at all
But you
concerned.
stuck with it?
Yes, I have.
You wrote it down?
Yeah, and it actually, there are lots of times where I get nervous about writing stocks down.
Yep.
I must admit this was not one of those times. I actually bought some more at the during the chaos of tax loss selling.
Yeah.
I thought this would be a perfect tax loss selling candidate, and I picked up some more.
Okay, so around that 60-cent mark?
No, 50,
Okay.
around that 50-cent mark actually.
Right.
Yeah, that was a great little. I'm not all that enthusiastic about the market at the moment, but that little period of time, you could understand why there was a lot of selling pressure. It seemed relentless and almost irrational, and that seemed like a good time.
But why
to be
MoneyMe?
Yeah, so every time these guys put an announcement, the results are sensational. This is a really, one of the qualities I look for in a business is something called hustle. It's the management's ability to make something happen, to do something better than their peers. It's a little aggro that the company has that pushes them to do more. And it's not something you can measure easily. It's not something you can replicate. It's not something that shows up on the balance sheet. But over time, it is everything. It's the difference between Telstra and Macquarie Telecom. I just listened to the AFR podcast, which that's why it was in my head. And it's the difference between a business that does Aussie Broadband is another one. Lavisa, all these companies, Minres. It's Minres and Rio, right? It's a business that can grow from nothing to something. Right. There is a magic in that, and if you can find those businesses and back them, and they don't always work, but that's where real magic happens in the share market. And look, I think it's too early to determine whether this is one of them, but it's certainly got a lot of the ingredients. This is a founder-led business, started from nothing. Only a couple of years ago, has a $1.4 billion loan book, which is astonishing. And as the loan book grows, the quality of the loans is actually getting better. The credit scores are improving, the cash flow is improving, the cost of credit is actually falling. And the products they released are not just standard products into the credit market, which is something of a commodity business. These are quite specialized niche products.
I have relatives and mates in the car industry.
Autopay.
And they're all talking about that. I was with a bunch of car dealers on Friday night in Adelaide at the MG Dealer Awards, and
it's a sensation.
I was quizzing them. So I said,
and what they say?
We've never seen take up like it in a finance package.
Well,
so
I think
within that little niche,
it's now their largest business segment, and it's only 18 months old. I think it's look. There's still a long way to go. The accounting is excruciating here. Every time they make a loan, they recognise the expected impairment on day one, even though the expected payoff doesn't come over a number of years. So as it grows, it looks like it's losing more and more money, which I think confuses a lot of investors, even professional investors. But I think you'll find that the cash flow here is going to start coming in. It's already profitable. Cash flows are potentially quite strong in this business, and it's wonderfully managed. The founder owns a huge chunk. Luke will tell me how much. About 50%. But so it's a buy for me. Speculative buy, because these things can blow up. But
the founder owning such a large chunk is probably the sleep at night factor you have with this business, because I agree with all of Gaurav's points around they can very much be black box businesses. The accounting can be very opaque, and the other one as well is for most of these fintechs, and I think MoneyMe is probably better than these peers, but you've had Wiser, Prosper, a few others list, and some unlisted ones as well in recent times. Not many have been tested by a true economic cycle yet, and so I think the market has really taken a step back and say, let's really see.
Well, particularly when Bolt said we're just going to give our money back and finish on 29th.
That's right. I mean, a way you can think about it, these guys, I agree with that hustle point. They really do outcompete most of the big banks. But given the distribution the big banks have, there's usually a reason why they don't compete in certain areas, and they're happy to give it to these minnows. So always keep in mind that you're probably playing in a space where the majors probably don't need to. But that can be for reasons because they're so lucrative where they play in mortgages. Look, the main thing I note for this business is there's very little equity backing that loan book, and I think that's the main risk to it. Is it requires flawless execution because it's so heavily leveraged. To the point where, as Gaurav points out, $1.4 billion loan book, and I've just brought it up, only $22 million equity. So,
which is extraordinary for the returns.
That's right. Right. So as equity investors, your returns are insanely juiced up.
Yeah.
But it means that requires that flawless execution, because if you get that little slight stumble, it doesn't take much.
Bought Society One too, didn't it?
They bought Society One, which I question a little bit because I think it took them out of their core. But I mean, I go back to that sleep at night factor. You've got a founder who owns 50% of the business. He has a lot of the characteristics Gaurav talks about with hustle. Even if I don't immediately see the big rationale behind it, I sort of implicitly trust someone like him, or give him the time, or see how he goes before I make a definitive call. Look, I agree with Gaurav. It's for the right investor. And if you're a conservative investor, I wouldn't touch it.
That's
I think
correct, yeah.
it's a business that has a very wide range of outcomes here.
Yep.
But if you think about the balance of those outcomes towards that, the outcomes are much more weighted towards the larger end than the lower end. But there is a zero potential here if things went completely off the rails.
Absolutely, and it's important to note that we don't own this in our funds, and so that says something about the point that Luke's making here, that it's for a particular type of investor.
Yep.
Okay.
But the result today, I mean, that cash profit continues to increase. That's so important to see in this environment.
Okay.
So
All right.
With these businesses, Koshi, it's the ability to say no that really matters, because you can actually grow really quickly in these companies by just writing more and more loans, and the result, the penalty of doing that doesn't show up until years and years later.
A long time later.
So there's an incentive there just to juice up your today's returns and face the consequences later on. The 50% ownership is a huge ballast against that. It's a defense against that happening, and the fact that the quality
and the impairment.
The fact that the impairments
process.
they're actually falling. The fact that the quality of the loan book is improving is also a defense. Yeah.